Good morning, good morning, good morning. It's Monday, the 9th of December, and this is the Morning Blast with myself and Mr. Michael Brown. I'm currently recording. Here he is. Let me just invite him to be a co host. Live from Malta, so let's hope the Wi Fi stays solid. I'm not sure how great it is, but we'll have a look. Mr. Michael
Morning,
Brown,
Ryan.
good
Good morning,
morning.
everyone.
Let me just get the legals out the way. Nothing discussed on this space session constitutes trading or investment advice or any kind of endorsement by PIQ Global Limited, Traders PIQ or PIQ Suite or its affiliates, including the hosts, which, as you know by now, is myself and Mr. Michael Brown. How the devil are you, old bean?
Oh, I'm very well, thank you, mate. Very well indeed. How are you? How is Malta treating you?
It's a lot colder than I was expecting, and I'm not really packed for that.
You muppet. Did
Also,
you
I
not
think
think to check the weather forecast?
no. Also, I think they have like something like 20 days rain a year. So let's just say that they've only got 19 left to do. Because it absolutely pissed it down yesterday. But anyway, I'm having fun pottering around. But no one wants to hear about me. What's been going on?
No, even I don't, Sean. I only asked out of
Well,
politeness. Indeed. Right, what is going on? Good morning, everyone. Let's have a quick look back at Friday and over the weekend, and then, of course, we can deal with the week ahead. Of course, Friday's main highlight came out of the United States in the form of the November labour market report, and I suppose it was a report, really, that in some ways sort of resulted in more questions than answers. To run through the data, headline non-farm payrolls rose by 227,000 in the month of November. That's above the 220,000 consensus figure, and also quite close to my guess of
oh, stop
235,000.
it.
Oh, come on, I'm normally miles off. Let me mention it at least once. Along with that payrolls beat, we had a net upward revision to the prior 2 months worth of data of 56,000, and that in turn took the 3 month moving average of payrolls growth to its highest level since May. Sticking with the establishment survey, average hourly earnings rose by 0.4% on a monthly basis, unchanged from the pace seen in October, while on an annual basis, earnings rose by 4%, also unchanged from the pace seen in the prior month. It was, though, the household survey where a little bit of cause for concern came in, with unemployment rising to 4.2% above the prior and consensus figure of 4.1%. And as some headlines pointed out, on an unrounded basis, the figure was actually close to, I think it was 4.246, which is obviously pretty close to being rounded up to 4.3%, which is the cycle high seen in July. I would just say on that, there's a surprising overlap between the number of people who claim that the BLS are making the data up and the number of people who quote unemployment to three decimal places and believe that it's
Yes, yes.
accurate. But I will leave that open to your interpretation. One decimal place is perfectly good enough for me. At the same time as unemployment rose, labour force participation fell, with participation down to 62.5 level of labour force participation since May, although I do think we need a little bit of sort of health warning with the household survey, given that it has been very, very volatile this cycle and response rates have fallen quite substantially. In any case, the market looking at that unemployment figure and saying that that cements the chances of a 25 basis point cut from the Fed next Wednesday. The OIS curve now discounting around an 85% chance of a 25 basis point cut in December. That's up from around 68% before the payrolls figures dropped. We also saw treasuries advancing across the curve as a result, led by the front end, with 2-year yields falling around 4 basis points to 4.1%, while the dollar traded choppy in reaction to the jobs data, but ultimately ended just a touch firmer north of the 106 figure. The Aussie and the Kiwi dollars were the biggest losers on the day on Friday, losing around 1% apiece, while equities gained ground, with the S&P 500 closing 0.2% higher, notching its 57th record close of the year. In terms of other bits and bobs then, as last week drew to a close and over the weekend, We also had jobs data out of Canada on Friday. Employment rose by 51,000 in November, considerably above, over double expectations. But we also saw unemployment move higher to 6.8% from a prior 6.5%, and the market, as a result, going all in on the idea that the Bank of Canada will deliver a 50 basis point cut at their meeting on Wednesday. That also comes as earnings growth slowed substantially to 3.9% on an annual basis for a prior 4.9%. Also on Friday, we had the latest consumer sentiment data out of the University of Michigan. Their index rising to 74 from a prior 71.8. This is, of course, the preliminary December figure. And if you dig into the data, it basically shows a massive rise in optimism among registered Republicans and a massive rise in pessimism among registered Democrats. So pretty much all of that a result of the election. In terms of news flow, there were a few close. In terms of central bank speakers, we heard from the Bank of England's Dingra, the resident Uber dove on the Monetary Policy Committee. She was on Bloomberg saying that they should be easing policy even more, which is not at all surprising given her well-known policy views. We also heard from a handful of Fed speakers. All of whom were indicating that further rate cuts are required as they move policy back to a more neutral setting. Although it was interesting to hear both Goolsby, who is a known dove, and Hammack, who is a known hawk, talking about how it makes sense to begin to slow the pace of rate cuts as we move into 2025, very much echoing the remarks that we heard from Chair Powell towards the middle of last week. In terms of other headlines in the computer/tech space, a few bits and bobs worth mentioning, even though Tom Talks Cars isn't on the call. The first is that OpenAI, they are in talks to change and tweak some of the clauses in their contract with Microsoft. The layman's version of this is that if the contract currently says if OpenAI develops something called AGI, which is, and I quote here, a highly autonomous system that outperforms humans at most economically viable work, the current deal says that Microsoft would not have access to that technology if or when it were to become invented. OpenAI want to get rid of that clause because it means that if and when they invent that technology, Microsoft will still be able to invest in the company and OpenAI will still be able to use all of their money, which is obviously favourable for the firm. We also had news out of Apple. I've got to be completely honest with you, I don't understand what this means. I'm going to read it out anyway. Apple plans a 3-year modem chip rollout in a bid to outdo Qualcomm. Answers on a postcard, please, if you understand what that means. I do understand this headline, and that is that TikTok, the app that people go and dance on, that is still going to be
Oh,
banned
God.
in the United States unless ByteDance sell it. They have obviously appealed the prior ruling, and the appeals court refused to block that law that was passed a little bit earlier in the year. So it looks like the era of people doing stupid things on the internet might be coming to an end. Over the weekend, without wishing to steer too far into Ryan's wheelhouse, we did have obviously news out of Syria that there's been a bit of a coup and Assad has now gone. He is apparently hiding away in Russia somewhere, so good luck to him, I guess. And we also heard this morning from China's Politburo. They are saying that they are going to effectively ease policy more and they've moved to a looser monetary policy stance. Appropriately loose monetary
So
policy is
also,
how they're
let's be
framing it.
honest as well. The language on what they've said this morning, the Chinese, has been very loose as well. They've not really said anything, and yet the market's gone absolutely gangbusters for it. So when the article's
Yes.
out of that one,
Well,
as usual,
I was just about to come on to that. Arno
go on.
Venter mentioned this to me this morning, our mutual friend, saying, as you say, there's a lot of rhetoric and zero specifics. This is what we see every time.
Yeah,
The communists come out and say something, the market gets all excitable, get expectations of stimulus go through the roof, and then of course you can never deliver on those stimulus expectations, which means that when they do deliver a package, it falls way short of what participants were wanting, and we see the market dump and eradicate all of those gains. And there's really no reason why that's not going to happen again this time around, I think.
all fart, no poo. I think that's the technical phrase for it.
Well, it might be your technical phrase for it,
It's
but
very, very. That's highbrow for me.
that's very true. That's pretty much it from me.
Okay. Perfect. Thank you very much. So, a few headlines from our dear friend Zach, who's listening in. Hello, Zach. So, on the macro front, Trump will not try to replace Fed Chair Powell upon taking office in January. That's what he said in his interview on Sunday. We kind of knew that was the case, and also even if he did try, he can't. There's no legal way for him to do that, regardless. But it makes a good headline. On the same NBC show, Trump vowed to extend tax cuts, launch a mass deportation effort, impose tariffs, and pardon many convicted in the Jan 6th attack on the Capitol. China's central bank resumed buying gold for its reserves in November after a 6-month pause. That's based on official data by the PBOC that was released on Saturday. Japan's bankruptcy filings this year are set to surpass 10,000 and hit the highest since 2013. That's from private sector data from Tokyo Shoko Research. There you go. First time I've ever heard of those. UK Labour demand has collapsed last month after the new Labour government's first budget. An REC survey published on Monday showed, adding to other signs of the impact of tax increases on employers. That would be the national insurance contributions. Options traders are the most bearish in months on Brent crude after OPEC Plus nations agreed to again delay the return of oil output halted since 2022. Just a few on the geopolitical side, as Michael just alluded to. Assad is no more. One thing just to keep an eye on with this is obviously Iran and particularly Russia, who have a blue water or had a blue water naval base in the Mediterranean on Syrian soil. Be one to watch and see how they deal with that and the implications on the geopolitical nature around there, because obviously it's Russia is a very, very big place, but blue water ports are something that they lack. They don't have many of those. Officials in the American administration fear that the fall of Assad will increase the pressure on Iran to give the green light to the production of a nuclear bomb. Trump said he would absolutely consider withdrawing US from NATO if European allies did not pay their bills. Obviously, he's trying to get them all up to the 2% GDP level. What else we got? China currently has nearly 90 naval and Coast Guard ships in the waters near Taiwan and the southern Japanese islands in the East and South China Seas. And this is getting the Taiwanese security sources a little bit jittery. And just a couple in the equity space before I pass back to my dear friend Michael Brown. Trump's transition team has invited 5 major tech companies, including Google, Microsoft, and Meta, to a meeting in mid-December about.
Oh.
And finally, the US government has approved the export of advanced AI chips to Microsoft operated facility in the UAE as part of the company's highly scrutinized partnership with Emirati AI firm G42. That's going to Axios. And back to you in the studio.
Thank you, mate. Well, in terms of today, it is quite a light economic docket to get the
Good.
week underway. We already had some inflation figures out of China earlier on this morning. We obviously had the Politburo nonsense, and there's not really anything else on the calendar worth noting. Although it is just important to bear in mind, I'm sure everyone will be very, very pleased to know, that the Fed's pre-meeting blackout period is now underway. So we won't be hearing from any of that lot until Chair Powell stands up at the post-meeting press conference next Wednesday. It is a relatively busy week ahead, though. Just to go through some of the highlights, we do have 4 G10 central bank decisions due over the next 5 trading days. Kicking things off on Tuesday, we hear from the Reserve Bank of Australia, not expecting any change there. They're expected to hold rates steady at 4.35%. Futures down in Australia not pricing the next year. That is despite inflation being within the RBA's target range, and also despite economic growth in Australia in the third quarter having been purely a function of government spending and not anything that's been going on in the private sector. Moving into the remainder of the week, we have a decision due from the Bank of Canada on Wednesday. Consensus, as I noted earlier, favours a 50 basis point cut to 3.25%, and the market is pretty much fully pricing that move after the jobs data that we had on Friday. Thursday, we hear from the Swiss National Bank. Consensus sees a 25 basis point cut to 0.75%. The market viewing that as pretty much a coin flip between 25 or 50 basis points. Of course, in Switzerland, inflation is considerably below 1% at this moment in time, and the Swiss National Bank have recently refused to rule out a return to negative rates. So that is one to bear in mind there. And last but by no means least, we hear from the ECB on Thursday as well, where we expect a 25 basis point cut in the deposit rate to 3%, and that is a move that markets are fully pricing in. In terms of other bits and bobs to keep an eye on over the next few days, on the data front, it is Wednesday's US CPI release that highlights the calendar. Headline CPI, that's seen rising by 2.7% compared to the 2.6% that we saw in October. Of course, that's the annual rate of inflation. Core inflation, that's set to hold steady at 3.3%. Also from the United States this week, we have the latest PPI figures, as well as the weekly jobless claims data. Elsewhere, we have jobs data due from Australia. We also have a whole host of trade figures due from China. And on Friday morning, we get the October GDP figures from the United Kingdom, which may reflect some of the pre-budget uncertainty that we are all very, very familiar with. On the supply front, it's quite a busy week. We have a 3, 10, and 30-year auction due from the United States on Tuesday, Wednesday, and Thursday, respectively. And last but by no means least, although earnings season is pretty much over, there are a few notable reports this week, particularly in the tech sector. After the close today, we hear from Oracle. After the close on Wednesday, we hear from Adobe. And after the close on Thursday, we hear from Broadcom. And that is pretty much your lot for this morning.
Well, Mr. Brown, thank you so much for that. As always, my dear friend, I'll remember to bring you back something nice from
Stick
Malta.
a rock, something like that.
I'm not really sure. Well, do you know what? I'm sure they must do their version of that. So yeah, I'll go have a look later on for you. But listeners, thank you so much for tuning in as usual. And we will see you all
We will
tomorrow.
indeed.
Take care and
Bye-bye.
goodbye. See you later. Bye bye.